Hello, everyone, and welcome back to this week's episode of the Rosa and Rubini podcast, Making Sense of This World. My name is Manas Chavla, and as always, I'm really pleased to be joined by CEO and Head of Research, Brunella Rosa. This week, we're talking about how markets are now increasingly more aligned to central banks' likely policy moves. We see some alignment between some of the major central banks, but let's take them one by one. And let's start off perhaps with the ECB, Brunella. What do you see happening here?
The ECB is the one that has moved first in March. So it was already last week when they announced they would not change its policy stance in March as widely expected. But then the real news is when they're going to move. So we always said it would be Q2, and then Q2 has clearly two meetings, one in April and one in June. And although they leave some door open to April, Lagarde communication during the press conference was pretty clear. They are waiting for the data on wages to determine how strong are the domestically generated inflation is, and this is mostly determined by wages, and this data will become available at the end of May. So as Lagarde said, in April we will know a bit more, in June we will know and not more, which is kind of a way of saying it's more likely to be June rather than April. So ECB likely to move in June and cut rates by, say, 25 basis points. The question is what happens after that? And this is where the real discussion is ongoing. I was at the ECB Watchers Conference this week, and there were various ECB board members speaking and so on. Clearly, there's the idea that if you start an easing cycle, you need to do two or three cuts at the very least. We assume at least three by the end of the year. So let's assume it's June, and it's June, September, and December. Is that it? Only three? Of course, the dogs will want at least one or two more, and then you have July and October. Is this going to happen? Well, the debate is exactly along those lines. Whether there will be an extra cut in this, let's call it intermeeting um, policy meetings by the Governing Council. So I would say that's the ECB.
Yeah. And I mean, we're just coming off the backs of an important Bank of England meeting. Let's talk about that. Have they mirrored somewhat an ECB policy stance?
Yeah, so Bank of England was out yesterday. Again, it was a meeting without new projections that will come up in May, but it was the day after inflation figures were released. And those inflation figures showed a sharper decline than expected. CPI fell from 4 to 3.4%, below 3.6 expected. That was enough to convince all MPC members not to vote for a hike. Until the previous month in January, both Catherine Mann and Jonathan Haskell voted for a 25 basis point. This downward surprise on inflation, which is of course welcome, convinced them that there was no need to vote for a hike anymore, and therefore it was 8-1 eventual outcome. Because one member, Swati Dhingra, as she's been doing for the last few months, voted for a 25 basis point. Now, we said that the BOE could not cut rates until there was somebody voting for a hike. That would be totally inconsistent. So now the BOE is ready to cut rates. When is this going to happen? Well, this is about what Hugh Pilt said. Hugh Pilt said it's still a long way off before the bank can cut rates. How long is long? Then, of course, it's a question. Well, May doesn't seem long enough. So again, it's June or August. And again, it's all about data. If inflation continues to surprise on the downside, perhaps in June already the bank can cut rates. If instead inflation remains a bit sticky, considering that services inflation is still at 6%, so wage inflation is between 3 and 5%, they may want to wait a bit longer, and they will wait until August. And again, that they get there, it's likely to have at least three cuts this year. The month will depend on when they start, but they have enough meetings to cut rates at least three times in 2024.
Yeah. And looking across the pond at the sort of Federal Reserve, We've seen some forecasts by people saying there might be many more rate cuts, possibly twice as more as we're expecting of the ECB. Do you see possibly any truth to that?
Well, actually, things have changed quite radically this week when the Fed released its statement and the new projection. So until December, they expected three cuts in 2024 and four cuts in 2025, plus three cuts in 2026. With the new forecast released in March, they graded growth and inflation outlook, both of them. Inflation not that much, was broadly unchanged, just a bit more. But growth was quite significantly revised up because the economy has surprised on the upside in the US, which of course has made the decision of cutting rates slightly harder for the Fed, which is the reason why the market celebrated the fact that the Fed still sees three cuts in 2024 in spite of this improved outlook. But nothing comes for free in life. So in 2025, instead of four cuts, there are now three expected. So a little bit less than before. Nonetheless, the market tends to be short-termist, and so is happy about this year, and next year we'll think about it. So there will be three cuts for the Fed as well in baseline scenario. And then, of course, anything can happen.
And then finally, talking about perhaps, as always, the most deviant central bank, the Bank of Japan. Is it doing anything differently this time?
Oh yes, big move. Um, there are things that happen very unfrequently in life, and what the Bank of Japan did this week, it was one of them. For the first time in 17 years, the Bank of Japan increased rates. Unfortunately, or fortunately, I was around when the entire saga started, and so see coming to an end is kind of also the end of an era. If you think about the end of the extraordinary easing by the BOJ that has experimented by far more than any other central bank in the world. Eventually, they were buying J rates, which is real estate securities. They were buying ETFs, which is effectively equities, corporate bonds, commercial paper, of course, JGBs. So, and they're trying quantitative and qualitative easing, QQE, yield curve control. So all sorts of experiment has been attempted. Now, they seem to have, they believe, or at least they hope, have achieved what they wanted, which is a positive spiral, which is what most central banks fear between wages and prices. But with the Shunto, which is the negotiations of salary, coming in at 5.28% just last Friday, the BOJ said, well, if we don't do it now, we will never do it. So eventually they got rid of the negative rates. They increased the deposit rate into an interval between 0 and 0.1. So we are talking about very minimal moves, but still significant. We are now positive. But most importantly, they got rid of yield curve control all at once. So that was kind of a bold move. People would have expected the sequence. So, instead, no, they threw everything out of the window, say it's new era, let's start like a normal central bank will deal with rates, right? Although they are not crazy, they will continue buying government bonds for quite some time to make sure that the long end of the yield curve doesn't shoot up. So, a mix of decisions, but it's still momentous and historical. And it was kind of, as I said, nice to see the end of this very, very, very long parenthesis in central bank history.
Yeah, I heard one commentator say it's almost like the Bank of Japan, after 17 years, is finally coming of age and maturity, moving towards a policy stance that mirror some of the other ones. So clearly quite a big moment for sort of monetary policy watchers, but also, much else to watch this year, as well as, as we discussed many times before, we're in a record election year, and an election year just like the American one, for instance, where monetary policy becomes very politicized. So I'm sure there'll be no shortage of conversations to have on this end. But as always, Brunello, thank you so much for your time and insight.
Thank you. Until next time.